Well, it's your own damn fault. You're so damn fat.
So before we actually start the weekly report, I do gotta say, these are actually from Xi'an, China, and they have not been cleaned, nor even removed from this package until just now. So if the coronavirus makes a comeback, you didn't see this.
I was down, but now I'm up. Yeah. This all God, this ain't no lie. Yeah.
We have a pretty busy week ahead of us with a lot of companies reporting earnings this week. We also have a good amount of economic data coming out. Keep an eye on the initial jobless claims and non-farm payrolls for Thursday and Friday. And of course, the biggest news is that Trump has launched trade war tariffs with Mexico, Canada, and China. 25% from Mexico and Canada, and an additional, important to remember that it's an additional 10% on China. And it's caused futures to gap down big, which we expected, especially if the tariffs were so big right off the bat like this. So right off the bat, by the way, if you haven't seen my tariff videos, I already made a few kind of reviewing tariffs or YouTube shorts, so go check those out. So a way to really consolidate this, make it super simple, is look for a rotation from tech to value and energy if we don't see some sort of resolution really fast, right? You would be looking for a big gap down, but the key levels I'm looking for the downside on the Qs are 514.41, 510.02, and 503.64. So I'll be looking to see if we can get those to fill. The other play I'm looking for to the downside is Apple. Apple had a great earnings and then sold off immediately afterwards, and I actually shorted this pretty much right off the rip on Friday because I had a great setup, and I'm looking to see if I can roll that position if we get under 230. I have Tesla on the watch list for as an upside position. I'm looking to see if we can break out over this 1 hour trend line. If I wouldn't say it's the most likely. Everything here is kind of pointing towards this going lower, which kind of sucks because I do have like a small call position that I left on, just in case we see a quick recovery. Frequently in the previous Trump administration, you get the very dramatic sell-offs in reaction to the market, or to the news rather, and then you get a mean reversion and everything kind of bounces back. So I might leave some of my call positions on that bleed and just kind of chase the market to the downside on Monday if it seems like we're going to get a continuation there, and just see if I can out earn those upside plays and let those just serve as a hedge for my downside, right? Be easy way to play it. What you don't want to do is kind of miss all the opportunities in the morning because you're managing all these bleeding positions, right? And if you have to, then you probably oversized. You know, if you're in a panic position, then you're probably too large on that, and you should think about that in the future, so you don't get put in those sticky or awful situations. The other thing I'm looking for is to see if we can get a reversal out of oil. Everyone's kind of piled into the short oil trade. When trades get crowded like this, they can have pretty violent blow-ups. And it's an easy short, right? Because Trump's going around the world telling everyone that they need to lower energy prices. He's also telling all the domestic companies that they need to drill, baby, drill to lower oil as well. And it hasn't really come down much. There's a lot of people piled into the short, though, and I think that the new tariffs with Canada, especially on Canadian oil, and Canada has also made some comments saying that they will try to make it as painful to the U.S. as possible because they know it will raise energy prices, and they know that's a big goal of Trump to keep those low. This could cause this trade to blow up and this to get kind of higher than people might expect. You know, really crowded trades like that can blow up really violently. So I'm looking to see if there's some opportunity there, kind of profiting off other people's demise, you know, on what they probably thought was a free lunch. There's no free lunches in the market. That's going to be it for this week's report. I will say this could be the start of a big bear market. You know, I've been telling you in the titles of our videos for the past few weeks that this looks like the final breath of a bull market. We ended up hitting a new high, trying again to reach it. And by the way, what this looks like right now with this bad news is a head and shoulders setup. So we'll see. We'll see if we get the plunge to the downside. And if this will be the case, we definitely don't have the same trend on the Qs, but I also think the Qs are, in fact, much more bearish. I think a huge pivot out of tech could be on the horizon. And I think this sell-off could quite literally extend until midway through the year. what to see, play it by ear. It's going to be a very volatile year. So become married to any of your positions. Be willing to change your mind, and it will save you from a lot of losses. So I hope you enjoyed this week's report. We're keeping it short. There's lots more content in the Discord, sharing lots more trade ideas. Added a new member to the team permanently. So there's a bunch more research and stuff you could check out in there. He's an energy expert, which will be good to have this year. So I hope you learned something, and good luck on your trading this week. God bless.